If you're a homeowner in London, this is the video you can't afford to skip. By 2026, millions of people may be forced to sell their homes. And it's not just because of the market. Rising interest rates, government policies, and hidden financial traps are creating a perfect storm for homeowners. In this video, I'm going to break down the exact reasons why this is happening, what areas are most at risk, and what steps you can take to protect yourself. By the end, you'll know whether you should hold, sell, or invest in the right way before it's too late. Here's a fact that might shock you. The average London homeowner now owes more on their mortgage than their property is worth. And with interest rates rising faster than any time in the last 15 years, many are staring at a decision they never expected. If you're thinking, that won't happen to me, think again. Even people with decades of equity in their homes are suddenly under pressure. And the clock is ticking. By 2026, experts predict that the number of forced sellers could reach into the millions. But here's the thing. This isn't just doom and gloom. If you know the signs and act smartly, you can actually turn this challenge into a massive opportunity. So grab a notebook because the next 7 minutes could save your financial future. Let's start with why this is happening. There are three forces colliding to create what I call the London housing perfect storm. 1. Rising interest rates. The Bank of England has steadily increased rates to fight inflation. If you're on a variable mortgage or your fixed term is ending, your monthly payments could rise by hundreds, even thousands of pounds. That's a huge burden, especially for families living on tight budgets. Number 2, property taxes and levies. Stamp duty may be slowing, but new levies like council tax hikes, environmental taxes, and potential wealth taxes could increase your yearly costs. Many homeowners underestimate how much these add up over time. Number 3, economic pressure and inflation. The cost of living in London has skyrocketed. Energy bills, transport, and everyday essentials are forcing people to reevaluate their housing expenses. Combine this with stagnant wages, and you get homeowners who no longer afford their properties. This perfect storm doesn't affect everyone equally. Suburban London and outer boroughs with high mortgage-to-income ratios are most at risk, while ultra-prime central areas may hold more resilience. But even so, the numbers suggest millions are exposed. Now let's talk about who's most likely to be forced to sell. The data shows 4 main groups. 1. Buy-to-let landlords with high debt. Many investors took on massive loans expecting continuous property appreciation. If rents stagnate or interest rates spike, these properties become unaffordable. 2. New homeowners who bought at the peak. Those who purchased in 2021 to 2023 may find themselves underwater, owing more than their property's current market value. 3. Retirees depending on home equity. Older homeowners planning to rely on property value for retirement might struggle if values drop or maintenance costs rise. 4. Middle-income families in outer London. Rising costs in transport and daily living can eat away at mortgage affordability, forcing sales. It's not about fear, it's about preparation. If you fit into any of these groups, ignoring these trends could be very costly.
Let's look at the numbers. According to recent forecasts, average London property prices are expected to fall by 5 to 10% over the next 3 years. Interest rates could rise to 6% or more on standard variable mortgages. The number of forced sales in London could reach over 1.5 million by 2026. Think about that. 1.5 million families facing difficult choices. And this isn't speculation. It's based on trends in mortgage arrears, inflation, and economic performance. Even more alarming, certain boroughs like Barking and Dagenham, Newham and Croydon have higher concentrations of high-risk homeowners. If you live there, this isn't just theory. It's very real. But here's the opportunity hidden in this risk. When millions sell, Property values in the right areas may drop temporarily, creating a golden window for investors and savvy buyers. So what should you do if you're a homeowner in London? Here are actionable strategies. 1. Assess your mortgage options. Speak to your lender about switching to a fixed-rate mortgage if your variable rate is about to spike. Even a 1% difference could save thousands a year. 2. Plan for extra costs. Factor in taxes, maintenance, and inflation when deciding whether to stay or sell. Budgeting isn't optional anymore. 3. Consider selling early. If you're in a high-risk group, selling before the market drops could save your equity. Timing is everything. 4. Invest smartly if you can. Those with capital could use this period to buy undervalued properties in safer zones. Think areas with strong transport links, schools, and growing employment opportunities. 5. Diversify your assets. Don't rely entirely on property. Stocks, bonds, and alternative investments can protect you from market swings. 6. Seek expert advice. Mortgage brokers, property consultants, and financial advisors can help you navigate the next few years strategically. Remember, acting early isn't panic, it's protection. The homeowners who wait until 2026 may have fewer options and less equity left. While millions may sell out of necessity, investors and strategic buyers can turn this into a major opportunity. First, focus on undervalued neighborhoods. When forced sales hit, prices may dip temporarily, but strong fundamentals like schools, transport, and job growth will keep long-term value high. Second, consider short-term rentals and buy-to-let opportunities. Even during a market downturn, demand for rentals remains strong, particularly in areas with rising rent prices. Third, think outside London. Commuter towns are often overlooked, yet they offer high returns for buyers willing to act early. In other words, one person's crisis can be another person's opportunity, if you know where to look and move quickly. To recap, rising interest rates, economic pressure, and government policies are creating a perfect storm for London homeowners. Millions may need to sell by 2026. But if you act now, you can protect your wealth, make smarter decisions, and even find opportunities in the market. So, take a hard look at your finances, consult experts, and make a plan. London's housing market is changing, and preparation is everything. If you want weekly insights on UK property, housing trends, and investing strategies that could save you thousands, subscribe now and hit the bell icon. Don't wait. The next big move in London property could happen sooner than you think.